Mm.
So hi everyone, thank you for waiting just a few minutes extra for us. Apologies for the delay. Welcome to this Bridgewater Chamber of Commerce webinar where Gavin Roberts of Chartered Maxwell Accountants is going to give us a review of this week's budget. We are due some more to join us, so if they do, I'll let them in as and when they join, but the recording will be sent out to everybody that's registered and to all chamber members anyway. So on that note, I will pass over to the man himself, Mr. Gavin Roberts.
Right, good afternoon, ladies and gents. Hopefully Roger is going to begin to share the presentation.
Here it comes.
Here it comes. So just from me, a very warm welcome. The sun is beginning to shine through the clouds of perhaps COVID. So let's hope there is some light at the end of the tunnel. Okie dokie. So the spring budget, which is an unusual one. We've been used to autumn budgets, so this was something new, very much based around a kind of a very much a support and then a kind of recovery phase and then a growth phase. That was the idea from the Chancellor. And very much looking at further grants, loans to assist struggling businesses, extending the employment support schemes through to the 30th of September, all of those sorts of things that came out of it. It's fair to say that the cost of the pandemic is obviously unprecedented. Some numbers that sort of hit me this week. So far, the cost of the pandemic in this tax year alone are projected to be greater than the amount raised in income tax over the same period over the next 2 years. So that's quite it's quite a big number really when we start thinking about sort of the national debt, I suppose. So how is the government going to claw back some of this money? Well, we thought maybe it was going to be in capital taxes. It didn't happen, so that was that. So some of the main highlights. Highlights, is that right for a budget? I don't know. Some of the main points that came out of the budget was a hike in corporation tax, but we were given plenty of notice for that one. It's not happening until 2023, and we were told about this super deduction for plant and machinery investment. So we'll talk about that a bit later. We've got what we call the big freeze. So this is personal allowances as well as a huge number of other allowances, all being frozen at their current rates, or with the personal allowance just slightly increasing it for the next tax year and then freezing it until 2026. So all of these rates are being frozen, which is it's basically a stealth tax. Fiscal drag is what it's known as. Not increasing the allowance rates, so that effectively more people are dragged into the tax regime, more people are paying more taxes, but without actually physically increasing taxes. And stamp duty. So stamp duty, the holiday extension period. The holiday period was extended, so we will talk a little bit more detail about some of those things. Coronavirus loan schemes. So I think a lot of commentators were expecting the CBILS scheme and the bounce back loans to be extended. I think that's what a lot of people were expecting, but they're not going to be. So 31st of March is the deadline, as previously announced, and that is that. So if you need to review how much money you might need to see you through the pandemic, what's left of it, then you need to be doing that in the next week or so, I would suggest. The finance houses are extremely busy with CBILS particularly, and therefore any later than that, you're probably not going to get it through. So you need to be really on that, as soon as possible. So speak to your accountant, speak to your finance provider to see if you can get those through as soon as you can, if that's applicable to you. Obviously, the CBILS, that was where you can have up to 25% of your turnover lent to you, and it was 12 months interest-free, repayment-free, and they paid all the arrangement fees. So it was a really, really good loan scheme from that point. But no more after the end of March, and the bounce back loans was obviously up to £50,000 or 25% of your income. Very little oversight in terms of underwriting on that one, and again, very similar terms with that one as well. 12-month break in repayments and interest. So we've got the recovery loan scheme happening from the 6th of April. Whether it happens from the 6th of April or whether it's a bit later than that, we're not quite sure yet. I simply say that because I don't think lenders are going to be ready for the 6th of April. So it might be a little bit after that, but we'll wait and see. Technically, it's due from the 6th of April. Loans between 25,000 and 10 million, and they will be 80% backed by the government. So very similar to CBILS as we've had. The big difference here is that there's no 12-month repayment and interest-free period. So and no sort of let up on the arrangement fee. So you will pay all of that, whereas you weren't with the CBILS scheme. So really. Yeah, if you are looking for funding and you think you might use a recovery loan scheme, and you are eligible under CBILS, then let's look at that over the next couple of weeks to see if we can get an application in before that runs out for you. Right, next slide, please, Rog. Right, restart grants. Okay, so this is for the hospitality, leisure, accommodation, personal care, gym, those sorts of industries. £6,000 for non-essential retail, those premises, and £18,000 for those other industries I mentioned, the leisure and hospitality ones. Of course, we're thinking that this is going to be facilitated by the local authority. Again, no word on that yet, but very similar to the business rates grants that we had, that we've been having throughout the pandemic. We think this will come through them, and naturally the devil will be in the detail, I'm sure, in terms of eligibility criteria and what you need to be doing to apply for those, but that's the general oversight there. Right, self-employed income support scheme. So we were told that there was going to be the 4th grant and the 5th grant, which is great. So this is obviously the Chancellor had never any intention of carrying this on after he put the first and second in, and he had to do a 3rd, and now we're on to the 5th. So this is unprecedented for him, but it kind of matches the periods of the job retention scheme. So this is why this carries on. It's 80% of your 3-month average profits, and it's capped at £7,500. This is the fourth grant. The good news here is it's extended to to include those people that have filed a 2019-20 tax return. So those people that were previously excluded because they didn't have an 18-19 tax return because they were newly self-employed, or they'd missed, they hadn't filed the tax return, they'd missed the deadline or whatever, they are now eligible. So it does bring in a new set of people who may be eligible, and it also potentially is a good thing or potentially a bad thing, because it now means that the grant, the averaging is over 4 years, not 3. It will take in the 1920 tax year as a basis. So actually, if your 1920 year was particularly good, then obviously that will increase the averaging. Obviously, if it's not great, then that might have a negative effect there as well. So it's the same criteria. If you've got to have a profit £1,000, you've got to have self-employed income above 50% of your income comes from self-employment. So if you're employed as well, it must be less than 50%. Property income, etc., might sway that. So it's the same criteria that it was before in terms of that. And obviously, you need to have been affected by COVID. The big thing with the fifth and, we're told, final grant, which covers May to September, interestingly, you only get 80% of 3 months averaging of profits, not 5 months, even though the period covers 5 months, which is a bit of a sort of oddity, but it is what it is. So that is that, and that's fine. But so for the fifth one, we just get a new kind of air to it, where we've got a profits reduction figure of 30% coming in. So if you have had 30% reduction in profits, you will get the 80%. But if you haven't had the 30% reduction, if you've only had 28% reduction in profits, then you in turnover, sorry, not in profits, 30% in turnover, then you will not get the 80%. You'll only get 30%. So that's kind of like a twofold thing, grant here. Just something I wanted to point out on the self-employed support scheme, and I think this may be a common issue that many of us have come across in business. I don't know. The Treasury has funded HMRC a significant amount of money to recover misappropriated grants. And I think this is really key to understand. So I think we're going to see a huge increase in recovery action by HMRC over the next 2 years. They've got up to 4 years to recover it. I think the next 2 years are going to be quite key. Same with the job support scheme. I think there's going to be a lot of inquiries into that as well. But the self-employed scheme is a really easy one for HMRC, because I think there are a lot of traders out there who are going to find it very difficult to evidence appropriately the impact of COVID and prove their eligibility. Not necessarily for the first grant. I think the first grant was a bit of a given. Second grant maybe, but certainly third, fourth, and fifth. If you look at the eligibility criteria of those grants, you do need to be able to prove an effect of COVID. So if you can't evidence that, then I think the revenue are going to come cap in hand and say that you need to pay it back. So it's just a warning, really, for any traders out there who have taken that, perhaps feel that maybe they didn't need to, and it's just a warning. I will say your accountant's likely to have tax inquiry fee protection insurance available. and that does cover inquiries into the self-employed income support scheme. It's relatively low cost, perhaps a consideration for the next couple of years for traders, I think, because even if you can prove it, I think there's going to be a lot of time and money spent in doing so. So that's my point on that one. Business rates. Okay, business rates. 100% business rates relief for the retail, leisure and hospitality businesses. So originally we went up to the 31st of March 2021. That's been extended to the 30th of June 21. And then we're going to give 66% relief to March 2022. There's some caps, £2 million per business, 105,000 for businesses that are not in the hospitality sector, etc. But that's detail, I suppose, and probably not that relevant to a lot of our members. So we'll move on. Okay, so we talk again about the hospitality sector. This is the reduced rate of VAT. So this was a temporary reduced rate down to 5% from 20 for certain supplies. So not everything, excuse me, for within the hospitality sector. And that was originally going to end at the end of March. It's been extended to the 30th of September. Which is great, and then we are also transitioning that as well to the end of March 22, and there'll be a 12.5% rate. So we just need to be on the ball a little bit if we're in the hospitality sector with our point of sale systems. So let's just make sure that every time we hit a date where we need to change the rate that we're doing so, and just from a bookkeeping point of view and certainly from an accountant's point of view, I feel like we might have some very complex tax VAT returns to be looking at going ahead. But yes, I'm excited about that, so that's all good. Right, we'll move on. Corporation tax. Okay, so previously announced 17%, that was abolished not in this budget, in the previous budget, 2020. So that's definitely not happening. We've got this 25% rate coming in from 2023, so plenty of time for planning. This is only for businesses with profits over 250,000. Okay, the small company rate will be 19%. And that's for companies with profits under £50,000. And there will be this marginal rate between 50,000 and 250,000, which happens to be 26.5%. So any pound that you earn between 50,000 and 250,000 will be taxed at 26.5%. But it's basically a sliding scale of rate between the 50,000 and the 250,000. Okay, for those of you that are into it, the associated company and group rules come into play, which means if you have a number of companies or you're in a group structure, then the turnover thresholds are reduced. They're split down, so you don't get 250. You might only get 125 or less than that, depending on how many group companies, how many associated companies there are. So that's worth considering as well. Okay, we move on to tax losses. Okay, temporary extension of the period over which businesses can carry trading losses back for relief against profits of earlier years to get repayment of tax. And this will have an effect for periods 1st of April 20 to the 31st of March 22. And that's for companies, or for those unincorporated businesses, we're looking at the tax years 2020, 21 and 2021, 2022. So previously we were able to just carry back 1 year. We're now able to carry back 3 years. We have to use the latest year first, so that, the most current year, if you like. And there are some limits. So 2 million of unused losses. Other limits that go back. Just a planning point on some of that. Whilst that might be really useful for cash flow to go back, you will be most likely relieving losses at 19%. Whereas obviously if you carry forward losses, then there's a good chance that you may be relieving them at potentially 25% or 26.5%, possibly, if you're in the marginal rate. So just a planning point there to consider. Okay, we'll move on to the super deduction. And yeah, I can't seem to say that without sort of wanting to wear a cape and things like that. But anyway, so this is for businesses investing in new, and this is brand new plant and equipment. So second-hand stuff will not be acceptable, and it's your normal plant and machinery from a capital allowances point of view. So it's computers, it's vans, it's anything which would be considered plant and machinery for capital allowances purposes. There are some exceptions, which we can get into in the detail. For those things that normally go into the special rate pool, you won't get the 130% deduction. You'll only get a 50% deduction, and most of those things are probably integral features. So if you're building something and you're putting in an air conditioning unit or electrical and lighting and things like that, those sorts of integral features are likely to apply at the 50% rate. This is only available for companies, so don't get too excited if you're a sole trader. Don't get excited at all, it's not for you. And there is an extension of the 100% first year allowances for zero emission vehicles. I say vehicles and not cars, for obvious reasons. Okay. So we move on to free ports, and who even knew what a free port was? So free ports. Let's demystify this. It's not a port, okay? So whilst there is some talk about goods entering and leaving the country, and they are almost all centered around some form of either seaport or airport or something along those lines. These areas are much larger than ports. It's not your traditional small port where we just sort of put up some Harris fencing and say, right, okay, that's our free port, and if it's within there, it's tax free, and if it's outside, we have to tax it. It's not quite as simple as that. These are large areas. They're effectively enterprise zones. That's what they are. They weren't. I was going to say they weren't allowed under EU law. That's not true. But we negotiated under our EU settlement that we wouldn't have them in the UK. Obviously, having left the EU, we are now open to have them. So the Chancellor is doing it. It has that element that I talked about, this tax site. So it has some customs benefits for where you can bring goods in, and you don't tax them until they leave the free port, rather than taxing them as soon as they enter the country effectively. But much wider than that, it's these tax benefits for businesses that set themselves up within a free port. and these businesses can get some quite attractive tax exemptions and or tax reliefs or tax allowances. And one of those is the structures and buildings allowance, which they can get 10% write-off per year. So that's quite a significant increase over what the rest of the country can do. Stamp duty exemption, so that's obviously quite a healthy exemption for commercial buildings. Plant machinery, first year allowances. So if you're not claiming your super allowance, then maybe in a free port you might be you might be able to buy some machinery, set yourself up there and get some first year allowances. There's likely to be some very good business rates relief, 100%, etc. And there's potential for national insurance breaks on employment within those areas, those free port areas. Now, that might even go beyond 2026, which is when a lot of these tax breaks are meant to run to. That might actually be 9 years from now, the national insurance exemptions, but all of that is still due to go through Parliament. There are currently, I think I read 9 free ports in the UK that have been selected. I believe that might be it for the time being. There was a bid that Bristol was going for, and that is, as far as I'm aware, is dead in the water for the time being. However, I see this as something that, if it works with the Chancellor, I think he will extend this. So I'm not sure that dead in the water is quite the right thing to say, and maybe we might see something a little bit more local than Plymouth, which is probably our most local place otherwise. So yeah, exciting times. Research and development. Okay. So research and development, right, there we go. There has been a cap on the amount of R&D tax credit which can be paid to loss-making small and medium-sized enterprises, and this will come in on or after the 1st of April 2021. Prior to the cap, loss-making businesses could qualify for qualifying expenditure on R&D activities. They were allowed to surrender the loss that they made for a tax credit up to about 14.5%, and then so this is now being restricted to £20,000 plus 3 times the company's relevant expenditure on workers, and that relevant expenditure on workers is generally the pay-as-you-earn and national insurance bill. And it's important to say that the revenue are still very keen for research and development tax relief to be utilised. They still see innovation as a key tool in the UK. So they're not trying to restrict that. They are just trying to reduce abuse, which they think there probably is some, and there's certainly some anecdotal evidence of that. So I should also mention, yeah, if there's intellectual property being created and the spend with connected persons subcontracting is less than 15%, then these restrictions are not applicable. So that's a possible way around that. Okay, so we'll move on and we'll get into the coronavirus job retention scheme, the exciting announcement that hit most of the newspapers probably the day before. The day before the budget, to be fair. So it is to be extended to September. Roger, if we could just move the slide.
I'm on that one on my screen, Gav. Have you got it?
Oh, right, it's me. I'm frozen there. That's all good. Very much like the personal allowance. Okay, so yeah, so the furlough scheme, whatever we want to call it, the coronavirus job retention scheme, the furlough scheme has been extended to the end of September. So that's great. It's from the 1st of July, employers are going to need to contribute. So there's going to be a 10% initially, and then 20% in August and September. Right the way throughout that, employees will still get their 80%. It's just how much the employer needs to contribute and how much the government's going to contribute. So that's fine. There is a potential opportunity to add some employees into the scheme who weren't currently eligible, because if they were on the payroll prior to the budget, prior to the day before the budget, and you've got your real-time information submitted, then from the 1st of May, then you're going to be able to add them to your furlough claim, whereas perhaps if they missed the boat the last time, they may have been excluded. So there is a little bit of light at the end of the tunnel for maybe some of those employees as well there. So that's worth considering. Okay, apprenticeships and training. So the government will extend and increase the payments made to employers in England who hire new apprentices. So I say in England because the rules are slightly different in Wales and Scotland, so which I won't bother going into. So from the 1st of April 21 to the 30th of September 21, you'll receive £3,000 for a new hire, compared with £1,500 previously, or it was previously £2,000 for those who were sort of age 24 and under the previous scheme. This is in addition to the existing £1,000 payment the government provided for all 16 to 18-year-olds who were apprentices. So that's exciting. Certainly for those that are looking to take on apprentices and build their businesses that way. There's a couple of, these are probably not exciting things at all, but I felt I should probably mention them, and they are specifically linked to COVID, and they've had to be entered into legislation just to avoid there being problems later on down the line. So some of you may be aware of the Cycle to Work scheme, and for the Cycle to Work scheme to work, it's quite a good scheme where you can purchase a bike through your employer and actually get some quite good tax breaks on it. But for it to work, you must actually cycle to work, which is fine, except when we're working at home, we're not actually cycling to work. So COVID temporary legislation has come in to say, actually, during this time, we're going to ignore the fact that you're not cycling to work, and the Cycle to Work scheme still works on that basis, because we think that would be massively unfair to undo all the tax breaks that you get for that just because a pandemic has stopped you getting on your bike. And we don't want people just cycling up to the top of the garden and back again just so they can prove they've cycled to work. So that's that bit. Coronavirus tests, I'm not sure anybody ever thought that coronavirus tests were a P11D benefit in kind, but it's been categorically put into legislation that they're not. So if anybody thought that was a benefit, that you're being tested twice weekly was a benefit to anybody, and the cost of those tests were going to end up being taxable on the employee, they're definitely not. I tell you, it worries me, some of the things they come out with. Okay, and then there's the exemption for providing home office equipment effectively. So if your employer has been providing you with computer equipment, phones, anything to basically set your office up at home, then we have an exemption here that says actually that's okay. We're all working at home, and employers are allowed to do that. So there's no benefit in kind there. Good. Let's move on. Okay, so where am I on my? Am I on individuals and housing?
Yes.
Yeah. Right, good. So universal credits. There has been an extension to the £20 uplift per week for another 6 months. So that's the way that works. So universal credit. If you've got less than 16,000 in savings and you're not working, we weren't able to access the self-employed income support scheme, you weren't able to access the job retention scheme, and you were basically left penniless, etc., then your port of call was universal credit, and that was temporarily uplifted by £20 a week to try and support people through the pandemic. That's remaining for another six months, so that's good in that respect. In terms of working tax credits, government's just going to chuck 500 quid at those eligible for working tax credits. They haven't got to do anything, they'll just get it. So yeah, fine, perfect. And that's to support you over the next 6 months. I'm not sure what 500 quid over 6 months does, but I'm sure for those people that are going to receive it, it's well received. Then we come on to the mortgage guarantee scheme. So the government will introduce a new mortgage guarantee scheme. So this comes in April 2021. And this will be the lenders across the UK will be offering mortgages up to £600,000 with just a 5% deposit. Okay, good. Initially, buyers will be able to fix their interest rates for at least 5 years. So that gives you some kind of certainty, which is great. And so that sort of, and this will be absolutely available till the end of December 22. So that's going to help hopefully generate some of the housing market growth. I'm not going to mention when the last time we had 95% mortgages and how that ended, and whether that's a good idea or not. I'm not going to go down that line, but I'm sure that is something that may get the housing market moving again. And in the same line, stamp duty, and that the stamp duty holiday being extended. So the up to £500,000 properties being extended. It was originally going to be the 31st of March, now going to be 30th of June 2021. And if you're not quite as extravagant and looking at £500,000 house and just want a £250,000 house, then you've got a little bit longer for that one. And you've got to the 30th of September. So again, that stamp duty is going to assist with that, I think, as well. So that was a fairly whistle-stop tour of the budget. There will be bits in the budget which I've, smaller bits which I've missed. I've just not put in because they're maybe not relevant to business necessarily, or they're just ancillary. And I'm more than happy to pick those up in questions or at a later stage. But I felt that I've probably covered the most poignant issues. So over to you. I'm happy to take any questions.
Ask a question?
You certainly can.
Hello, Gavin. I don't even remember. Tracy put me in touch with you in November when I was having problems with furlough claims.
Oh, yeah.
Yeah, because I don't pay my NI on a RTI basis. I pay it annually. Since that problem, I've now instructed my accountant to they process my payroll monthly, and so I'm doing RTI contributions. My first one was in February. So on that basis, from what you're saying, the furlough scheme should open up to me from the 1st of May.
So yeah, that's 2 thumbs up.
Yes, 2 for me as well.
I'm really.
We can start to eat again, Gavin. Yeah, so that's what I mean. I'm delighted to hear that, because I didn't pick that up from the budget commentary. So thank you for that. But yeah, assuming that I'm in from February, I should be okay, shouldn't I?
You absolutely are. Yeah.
Brilliant. Thank you. And can I just make my apologies now, because I've got to move on to a WebEx conference at 3:30, and I've never done it before, so I need 10 minutes to set up. But thank you, Gavin. I enjoyed that, and you've made my day.
Well,
Thanks for joining.
All right. Good afternoon, all. Thank you.
Take care, Mark. There you are, Gav. Success. Adam also states in the chat that you may have an illegal expenses section in your insurance policy that covers tax inquiries. So that could be worth looking into. And if you've got somebody that deals with your insurance for you, having a conversation with them. Anybody else got any other questions? I mean, from me, thank you very much for your time today, Gav, and in preparation for today. It's a really good summary of the budget, and we will send that out to all our members, and I'm sure that it'll be appreciated by them as well. But if anybody else has any other comments, feel free to fire them away.
I was just going to add a little bit on the CBILS. We're still seeing quite a few applications coming through. However, we've also been told by British Business Bank that application approvals on average are less than 40% at the moment.
Wow.
Yeah, so I think a lot of funders are just getting a bit picky. I think those that made good sense in terms of their lending probably did get the money that they wanted. Then, of course, in between the CBILS and the rescue recovery loans, there's this pay as you grow initiative, whereby you can extend the term on your bounce back loan. So if you don't want to take out a recovery loan or a CBILS, you can extend your bounce back loan instead.
Yeah, Dave, just thanks for bringing that one up. Actually, something I probably wanted to cover off, and it'd be useful just to cover that off now. Actually, I should have mentioned it under the CBILS and the bounce back loans, the pay as you grow announcements, and they've been happening before the budget, and there was a little bit came out in the budget as well. So this is both bounce back and CBILS. You're able to have a 6-month interest repayment free period, so added on to the repayment schedule. You're also, certainly for the bounce back loans, able to instigate 3 separate interest only repayment periods of up to 6 months, which could be really handy from a cash flow point of view. And there's also the restructuring from 6 years to 10 years. So all of that goes through your lender. So you need to speak to them, and I think they're going to be really busy. So it feels like, I mean, depends when your repayments are due to start, but if they're due to start imminently, then you need to be getting on the phone. But if you've got a few months, then you can obviously leave it a little bit, but don't leave it too late to start that process, because they are going to be busy with it. I'm sure there's going to be systems that they're going to put in place in terms to make that a little bit easier. but yeah, as a support mechanism from the British Business Bank, then those are great little caveats to have. So let's get on those.
Absolutely. I made a couple of notes. First one being that the thing that came across to me from the budget the other day is that whilst the headline will be, we're giving, we're not kind of taking money back yet, etc., etc. It's very obviously time to start clawing back if you're the Treasury, isn't it? And even the corporation tax, well, okay, 2023, but it's coming, so be ready. Was a definite thing for me. And as you said a couple of times, Gavin, the devil is always in the detail of these things, isn't it? So it's definitely worth speaking to whoever advises you on financial matters, because it could potentially be minefields in here that people inadvertently step into.
Absolutely. And there are some great, particularly when we're given a significant amount of time with an announcement like the corporation tax rate increase. There are always opportunities for planning, which is great. But you need to look at that. You need to look at the opportunities for planning. You also need to look at any pitfalls as well, because particularly with the capital allowances, with the changes in rates, it does cause a few pitfalls and problems at particular times, depending on when your accounting periods finish and things like that could really cause you major issues if you're buying things. So you have to be very careful. So always take advice, absolutely. And like you were saying, whilst the headlines are that we're not grabbing tax, we've not gone against our manifesto promises, and we've not increased income tax and VAT and national insurance. But what we have done is frozen all of those allowances, everything's been frozen, which until 2026. Now, whether or not we have a, we're going to have a change of government probably, potentially before 2026, certainly a general election. So whether that actually does change anything in terms of those rates, but everything's been frozen, which means with inflation, then absolutely that is taxing all of those rates. So we have to be mindful of that, and not only so much. I don't disagree with it. We need to get the money back from somewhere. We've spent a huge amount, unprecedented amount, on this pandemic and ensuring our country and our economy doesn't implode. So it does need to be repaid. So I get it, but what we are potentially at risk of doing is dragging a lot more taxpayers into a tax regime where they weren't previously. So that's problematic. We've spent quite a number of years trying to get a lot of people out of the tax regime, and it feels like we're dragging them back in again. So a positive budget, but definitely with a caveated
And very possibly the more cynical ones amongst us, of which I count myself quite highly, are probably already looking to a pre-election. Oh, that freeze we said, we might just not do that for this year, kind of thing. But as always, like you say, Gav, the devil's in the detail. The other point I was going to make is on the Bristol Freeport, the Great Western Freeport. I was just going to point out that it did come down as far as Gravity, so on the edge of Bridgewater, was actually included within the boundary for the Freeport, and I'm sure there are people within the Gravity and other kind of elements of that Freeport that will be lobbying very much to try and get it included in the next announcement, I would think.
Yeah, very much hope so.
Indeed. Anybody else got any other comments?
No.
Excellent. Well, thank you very much for your attendance. As I say, thank you very much, Gavin, for the work in preparation for today, as well as the presentation itself. We will make sure that everybody gets a copy of the recording, and Gavin's been good enough to send us some associated guides as well, which we'll include in the email with the recording. So thank you very much. Have a lovely weekend, everybody. Stay safe.
Thank you, everyone.
We'll
Cheers.
see
Thanks, Gav.
you next time.
Gavin.
Thanks, guys. Bye.
Bye all.
Bye.
Cheers. Thanks, Gav.